So, hey everyone, as of May 9th, Bitcoin is sitting around 79,300. This is an important level according to the Fibonacci retracement, the zero point 0.5 level, which we ended up bouncing off of. Previously, this level provided strong support because it had acted as tough resistance before. The price of Bitcoin could not break through it right away, and after it finally did, it came back to test this level twice. Now, this level is acting as solid support, although I wouldn't rule out some more movement. We could see a move up to around 79,500 to continue the upward trend and close this gap at 83.4. But to be precise, it's actually a bit higher, around 84,000. You can check the CME chart yourself and see this gap firsthand. So the gap here was pretty significant. We've probably already closed about 80% of it. It started at 79,600 and ends around 84,000. I believe that, in any case, we will have to close it, because gaps like this always get filled. And only after it's filled is there a chance we might go down. And even then, we'll be paying the most attention to the level signals, because the next signal is at 83,800. If we fill the gap and manage to hold above the 0.38 level, then there's a chance we could continue moving higher. So our next level is around 89,400. But this level is very strong. The 0.38 Fibonacci level is a strong resistance level. Because if we stretch the Fibonacci from 15,500 from the very bottom to the very top, it turns out that the 0.38 from 15,500 is also right here. And accordingly, the level from this peak to this low is also in the 0.38 zone, at exactly the same level. That's why, friends, this is a very strong resistance. Earlier, I showed you that we've already created strong support here. And after breaking through it, we naturally created strong resistance. From here, we should see a reversal. We also see this on the 4-hour chart. My indicator was showing a decline, and this signal worked out perfectly. I made a little profit on it. I closed a bit early, but I'm waiting for a stronger move. In other words, I need a stronger recovery that covers this gap. And accordingly, after that, a move down to cover these gaps that we created earlier. That's why now I'm watching the 79 level. This is a very important level for further decline. So if we get, say, a retest and a breakout of this level with a subsequent hold, then there's a high probability that we'll continue to drop further. But as long as we're at the 79 level, this gap remains relevant. And also, if you remember, in the previous video I showed, at the 85,000 level, that's where this part of the liquidity is located, which we need to take. And here again, we shouldn't just see a simple, some kind of decline, calm and quiet, where you can just go short and go all the way down to the very bottom. But what we should see is a move up here and then a sharp sell-off, so we don't have time to enter at the very top. That's why we need to see immediate strong pressure and a drop. I'll be watching my indicator again, a signal for a decline. Because at this point, Bitcoin is already extremely overbought. We're already on the edge, literally on the edge. The 70 level is quite a serious overbought zone from which strong sell-offs often happen. This is already very serious, and we'll need to unload here in the same way. But again, you can see how it happened here. And I expect to see the same kind of move here as well. After that, it'll serve as a signal for me. So from this zone, we should get exactly the same kind of sell-off as we did here. We went down after we reached the overbought zone. Right now on the daily time frame, we have the same kind of overbought condition. We're already around 69, and now we need to reach this 70 to 72 area. Maybe we could even get to 75 or possibly even 80. And from there, we'll start to correct. So that's absolutely certain. It's gonna happen. We'll keep going down and the price just won't be able to hold. It won't be able to move up any further because we're seeing an outflow of liquidity. We can see this in the dominance chart, and it's exactly the same here. We have a signal indicating a drop to the 0.38 level, which is the 56 zone in terms of dominance. It's exactly the same situation with Bitcoin here. We'll gradually move up, reach an overbought condition, and then start to unload, dropping down to the levels of 67,165 and 69,780. The fact that we're closing the gap here first means that later on we'll definitely close it as well. These gaps on Ethereum look different because Bitcoin is more important than Ethereum. It's older, and Ethereum always follows Bitcoin. If Bitcoin manages to recover, but Ethereum can't close this gap, then most likely it won't, because the outflow from Ethereum is much stronger, the liquidity outflow in Ethereum's dominance. So we can see that liquidity is leaving, and it's already leaving Bitcoin as well, as you may have noticed. Gradually, if Bitcoin keeps dropping and continues to fall below 0.23, then when the month closes, this will confirm the breakout of that level. That's why we might see further decline in Ethereum. For now, my indicator shows that we've reached 2,250, and that's already a completed signal, so we'll keep watching from here. But here, we also need to point out something on Bitcoin. This kind of situation happened to us in the previous cycle. Here's my gold level indicator. And here, take a look. March, April, May. So by May, we were already moving down here. But now, in May, we're a bit above this level. The blue level, you can see this huddle. You can see that we've risen about it. What does this mean? It means that if we've broken through this level, in theory, we should reach the next level. But here, we need to take gold's correction into account. So far, gold hasn't corrected yet, and it should correct further. If that happens, then this level up here will put pressure on the price, and it will turn around and eventually go down. But as long as we're at the top, and if gold keeps rising, then this lower level will push the price higher. That's how it works on my indicator. Here you can see how the situation played out. It's the same thing. We broke out from under this level, from under the gold level, several times, twice here and here. And after that, we went down. If you remember, and I can remind you, this is where the Russia-Ukraine military operation began. After that, Bitcoin started to slow down, but in the end, everything went down because the fighting escalated into more intense battles, and we continued to drop further. At the same time, there were also various project hacks, including the Luna scam and other altcoins. Right now, everything is calm and quiet here, and we see exactly the same situation, just like it was in 2022. The same thing. As for Iran, nothing is clear yet. It seems like there's a war, but at the same time, it doesn't. It kind of looks like they've reached an agreement. But if we do see an escalation, then Bitcoin will also break back below the gold level and drop like a rock. 57,800 is the level that Bitcoin needs to correct to so that from there it can bounce back. Here, we might still see a bit of a rebound, and overall, everything looks logical. Right now, we're seeing an upward movement. We're testing the 0.38 level, getting a reversal from it, and as I've already shown you, on the daily time frame, we're overbought and heading down to 57,800. So this isn't the ultimate level, of course, but it's an important support level. If it gets broken, the price of Bitcoin will drop much further down, and then we'll be correcting by about 80%, just like it's happened historically. So right now, what I expect, as I've already said, 84,000 serves as a strong resistance level for me. from which I expect to see a reversal in further decline. I expect that we'll close the gap on the CME, and then we'll close the gaps below as well. The same kinds of gaps on the CME to restore price fairness, the prices. We'll also collect all this liquidity. To make it clearer, I'll show you here. We'll need to collect all this liquidity. As you can see, there's really not much left here. Yes, there is some at the 90 level, but to get there, we need liquidity, which is pretty much lacking. We're seeing outflows both in Bitcoin and in Ethereum. That's why, in order to grow, we need an inflow and stronger news that will motivate people to invest in Bitcoin. And as you know, we're entering the summer season now. The summer season is vacation season. That's why many investors take a break from the market and, accordingly, don't invest in such high-risk assets. So here, at the 84,000 level, this whole movement will run out of steam, and we'll have to test at least the 78,000 level again. And at most, friends, we have a bull flag forming, and we can measure its potential further decline like this, roughly speaking. So if we measure from here, that's exactly the level of thought. Let's say it'll be somewhere around here, like this. 43,000, 47,000. At 47,000, there's a very large amount of liquidity, which we'll definitely collect. And that will be the fifth wave, the one that completes this whole movement. As you can see, it's missing. The fifth wave, this will be the fifth wave, which should come right into the zone. And here we could still see some upward movement. It looks exactly the same on Ethereum. If we take, for example, the monthly time frame, here too we see an upward movement, an ascending channel. And just like before, we measure the movement of this flag, apply it here, and the target is $1,000. Also, as I showed you earlier, we formed a head and shoulders pattern here. We measure the head and get a move like this up to the 1,400 area. Yeah, in principle, we could reach this zone and from there start a new upward movement. But considering such a strong correction, this upward movement won't be particularly strong because the drawdown will already be 77%. For Bitcoin, if we drop to 44,000, that would be a 64% drawdown. But usually, corrections after such a prolonged upward movement, which lasted for 3 years, should be much larger, like 77% or more. 83%, 87%. Here, the upward movement lasted much longer than usual, by a whole year. That's why I expect a correction here could be about the same, give or take, around 80 to 85%. So from this zone, I expect to see some kind of bounce, but it might just be a small one, just a test. The 0.61 zone. And if we reach the highest point, according to the Fibonacci, then we drop back down to the lowest one. So this is about where we should expect Bitcoin to be. So friends, you basically get what I mean. Right now, I'm waiting for a recovery to 84,000 to close the gap and then drop further down. I'll also be watching Ethereum here because I'm planning to open a trade on both Bitcoin and Ethereum. So first of all, I'll be keeping an eye on Bitcoin and how it closes these gaps. Let's see how Ethereum behaves. But again, with such an outflow, I think this will be a minor move that will ultimately follow Bitcoin's correction. So basically, Bitcoin will be the first to make a move here, and then Ethereum will follow its lead. That's all I have for today. I wish you only good trades and big profits. Good luck, and see you next time.